Good evening, everyone, and welcome to tonight's Strategy of the Week titled Cashing In at the Top. My name is Jerry D'Ambrosio, Senior Instructor with VectorVest, and it's my pleasure to present tonight's strategy for you this evening. The market rally off of the February 5th low seems all but over. So whether you are looking to hedge your portfolio or you have a strong bias to the downside, VectorVest is going to be your guide to help you maximize gains and minimize losses in your portfolio. Tonight we're going to go through some steps that will allow you to cash in at the market top. Our goal, first and foremost, is to recognize market direction. We then decide what stocks or ETFs we are going to use that best fits our investment style to help take advantage of that direction, and then be sure to have a sensible exit strategy in place. And as always, our market analysis begins at the home page of VectorVest 7. So let's begin. Now we get a quick snapshot by looking at the quick list gadget of the major indices today. Nothing to get excited about. Markets are virtually flat. VVC is up about 0.25%, but it's been an up and down day today, so no real direction. Our market time engaged needle is still neutral, straight up into the yellow. Now our bias is to the downside because of the condition of the primary wave. The primary wave, even though the VVC is up 9 cents today, is still down. So we're never going to trade against the primary wave. So our bias is to the downside. If I open this up here, if I'm going to click on this configure button, change the color guard from small to medium, you can see the clear transition that has been occurring over the last 3 weeks. And it really doesn't get much clearer than this. End of February, beginning of March, the color guard was predominantly green, and we're starting to see all yellow lights, which again is a clear indication of a transitioning market. So once we've established our bias, once we've established the direction that we're going to take, the next step from here is from the home page, take a look at a market timing graph. Now we're looking at the last 3 weeks of data here in the color guard, but a market timing graph allows you to extrapolate a lot of information using these indicators. So I'm going to come up here, click on graphs, change us from a stock graph to a market timing graph, and I'm going to look at the last 6 months of data. I'm going to change our graph layout to the GLB RT kicker, and you'll notice as of right now, about 1:30 p.m. Eastern time, the 10-day moving average has crossed below the 15. So for those more conservative investors, this is an opportunity to start taking profits and reducing your exposure. You can see back here at the end of January, that was a good opportunity to do so once the crossover occurred. Market moved sideways here for a little bit, resumed its uptrend, but it wasn't a very strong uptrend. And we can see when that crossover occurred back here on September 30th, another good opportunity to reduce your exposure. I'm going to bring us back to current here. While preparing for tonight's strategy of the week and from talking to Dr. Delito, one thing that he's done with this picture here is he's added a 5-day moving average to the relative timing. I'm going to add that 5-day moving average. I'm just going to zoom in on the more recent date here, and I'm going to change the color from white, we'll change it to red. And the technique that he's used recently is once the 5-day moving average crosses below the 10, he has sold half of his positions. You take money off the table, you reduce your exposure, and by doing that, you're essentially playing with house money, right? You're financing your stops. Once the 5 then crosses below the 15, he then sells the rest of his positions. So for the conservative investor, the 10 crossing below the 15 is a great opportunity to do this. But if you're a little bit more prudent to aggressive, using a faster moving average like the 5-day moving average on RT allows you to take defensive actions a little earlier. Now if I go back to a 6-month graph, you could see how this has worked out recently. The 5 crossed below the 10 back here on the 27th, so this was another earlier signal or early opportunity to reduce your exposure. Back here on the 30th of October, a great opportunity, great early warning signal here of this little downturn that we had. And back here as well on the 25th of September, a few days before the 10 crossed below the 15. And using moving averages, folks, is just classic technical analysis. They work great in trending markets and they help you identify potential turning points. Now, when you get into situations like this here in the end of November, beginning of December, when the market's moving sideways and a little volatile and not really trending, you're going to get whipsaws from time to time. But these examples, when you see these three moving averages fanning and creating separation, really helps you determine if there is a trend in place. Once that trend breaks down, I'm going to zoom in here, and the shorter term moving average crosses below a longer term, that again is signaling a potential turning point. So these are just some tips here to help you protect profits. This has been a great run, a really strong uptrend from this February 5th low. We reached a high of $37.82 on the VectorVest composite on March 7th, and we're now 5 days off of that high. But there have been some signals here over the last few days to help us capture and maintain those unrealized profits. So what this is information. We're trying to give you as much information as possible to help you take advantage of any situation that may occur. So it's clear we're in a downtrend here. We have all three moving averages really starting to move lower now on the relative timing. So not only are you reducing your exposure on the bullish side, you may be wanting to take advantage of this downturn, or at the very least, hedge your portfolio. So from here, I'm going to move us from the market timing graph. I'm going to come up to the Derby tool, and now we're looking at 180 plus searches over the last 6 trading days, and I set the time frame here to 6 trading days. I set it from the actual top, March 7th, to current. So we're able to see here the performance of all of the searches in this tool over the last 6 days. And the first thing I like to do is look at the Derby summary. Obviously, there is a clear bias to the downside. We have 88% of the bearish searches making money, while only 9% of the bullish searches making money, again, over the last 6 days. There is plenty of information on the market timing graph to let us know that we have a clear bias to the downside, and the Derby summary in the tote board serves as its own internal market timing system. So we have a clear bias to the downside. We're looking at the last 6 trading days, and we'll go through each one of these analysis modes. We're looking at the day trade mode now, and at the very top we have all shorting searches, duck hunting with industry groups, ballistic new high short, Doug's Downer supercharged. All 3 of those are up double digits over the last 6 days. If you don't like the short stocks, we have worst performing contra ETFs here. Buying contra ETFs, they've been performing very well over the last 6 days. I'll change our mode to buy and hold. That simply runs quick tests on each of these searches from the 7th of March to current. I'll close down the Derby summary. Pretty much the same searches at the top, duck hunting with industry groups, Doug's Downer supercharged. You have the contra ETF searches here. Ballistic new high short is down here, up about 3%, so a nice gain there as well. I'll do another mode, vary the start date. Ballistic new high short up at the top. Same suspects, same searches up at the top once again. If I click on ballistic new high short, this is also running quick tests, but it's varying the start date. It's running a quick test from the 7th of March to current, the 10th to current, the 11th to current, and so on. And it allows for immediate analysis of the efficacy or robustness of some of these searches. And the last mode I'll look at is the sliding window. Pretty much the same searches at the top again. Ballistic new high short, Doug's Downer supercharged. You have contra ETFs down here, forming nicely as well. So I just want to talk about what I just did. Within about 5 or 6 clicks, I just ran thousands of quick tests. So I just did within seconds what the simulator and the variator can do in hours, if not days. So if you are looking to either hedge your portfolio or play this market to the downside, here are the best performing searches right now in the current market condition. If you don't have a margin account, if you're not comfortable shorting stocks, contra ETFs is a great alternative, and you can see that they've been performing well over the last week or so. But if you are comfortable shorting, there are some great candidates here at the top of the list. But a few of these searches are vastly different. I want to take, for example, ballistic new high short and Doug's Downer supercharged. Both performing very well over the last 6 days, vastly different in the type of stocks they find. Let me move us now into the Unisearch tool. And I'm going to take the date here back to the 11th of March. And if I click on OK, the reason why I took the date back to the 11th of March, that was when the primary wave first turned down. So that's our signal, right? We're always looking for a signal to let us know when an uptrend has ended, when a new downtrend has started, and that was the 11th. I'm going to open up the searches short folder, and I'm going to double click on ballistic new high short. That will run the search, and I'm going to close this section down to give us a little bit more real estate. First thing I want to do is I want to take a look at price to value comparison. We can see that all of these stocks are grossly overvalued. LJPC, price of $17.96, value of 8. TKMR, price of $30.94, value of 2. Take a look at the fundamentals of these stocks. Very poor. Okay, so these are the type of stocks that you'd want to short or that you'd favor shorting. But look at the relative timing of these stocks. These stocks have established strong uptrends. The day we run this search, these stocks have hit a new high. What tends to happen, we talk about this all the time in various seminars, what tends to happen to these overvalued, fundamentally poor companies when the market begins a downtrend? These are the types of stocks that fall the fastest. Let me graph, just say the top 10 stocks here. Let me change our layout from 1 year. Let's just do a 3-month graph. I'll take off the moving average. We'll keep RT on. We'll notice RT is at 1.97 currently. And if I come down to the bottom left here, select the primary wave. Primary wave turned down right at this recent high on March 11th. So the stock gapped up, went parabolic. It had moved sideways there for the last 3 months. It gapped up. It's extremely overvalued, very poor fundamentals. And we'll notice what the stock has done since that primary wave down signal. I'll go to the next one. Now this wasn't so parabolic. This stock was in a very nice uptrend over the last 3 months. Primary wave turns down on the 11th. Stock has consistently fell over the last few days. Same thing here. Another one, NWBO, reached a high on the 11th of March at about $10.64, and it's currently trading at $7.72. Another good example here. Here we're looking at ARWR. This was in a nice steady uptrend here over the last 3 months. Primary wave goes down, and the stock has consistently fell each day since that signal. So you can consider this type of search, ballistic new highs short, a little bit more of an aggressive shorting search, right? These stocks have been in uptrends, but they're extremely overextended, they're overvalued, and fundamentals are very poor. Now the upside potential though for these short plays, for these short trades, is very high. These stocks have a long way to go. They have a long way to fall. Let me close the graph here. So if this is the pond that you're willing to fish in, this search is performing very well right now. I mentioned before, you may not feel comfortable shorting. Maybe you don't even have a margin account. But you know what? A lot of these stocks, they're optionable. If you see an X next to the exchange column, it means the stock is optionable. So you don't have to short these stocks. You can buy puts. You can trade bear call spreads, bull put debit spreads. There are a lot of different instruments that you can use if you don't feel comfortable shorting. If I open up our search directory and now take a look at Doug's Downer Supercharged, you're going to see a big difference here with the type of stocks. Many of these stocks are optionable as well. The prices of these stocks are well above their values, but take a look at this. RV and RS well below 1, so very similar to ballistic new high short, but these stocks are already in downtrends. They have sell ratings and they have RTs below 1. If I graph those, you're going to see an entirely different picture here than we just saw with ballistic new high short. This stock is already in a downtrend. If I put the primary wave on, primary wave turned down here. Very good opportunity to short the stock or, again, place an option trade, a bearish option trade. The stock is already in a downtrend. Same thing here with TNXP. You'll notice the common denominator with all of these stocks. They're already in downtrends. Big difference between this search and the ballistic new highs short search. So our first job is always to identify market direction. By doing that, we'll notice that we have a downward bias with the condition of the primary wave being down for the 4th day. And as I'm recording this presentation, you'll notice that the major indices are now falling as well. All three major indices are in the red. I talked about the various signals that Dr. DeLito has used in determining when to lighten the load on his bullish positions and start hedging his portfolio and playing the market to the downside. We use the VectorVest real-time derby to identify the best performing searches in the current market. Now, don't feel that if you don't have the derby, you can't obtain this information. Every day in the VectorVest views, in the strategy section, we give you the top derby winners, which are the 5 best searches each day, and also the 5-day derby winners, which are the 5 best strategies over the last 5 trading days. So there's a gold mine of information right here in the VectorVest views that you can use no matter what the market condition is. And again, VectorVest will be your guide to help you navigate the markets no matter if they're going up, down, or sideways. Well, thank you for joining us today. As always, we will be holding a live Q&A webcast on Monday at 2 p.m. to answer any questions that you have regarding tonight's presentation. You can go to that website that you see there, www.vectorvest.com/events, to register, or we've provided you a link in the VectorVest views that you can use as well. This concludes tonight's strategy of the week. Have a great weekend, everyone.